Okay everyone, welcome back. I am Fuke, and today we will be looking at some of these trend line breakout strategies that I use to trade the real market and the binary options too. This is a cryptocurrency that you are seeing right now. There are a lot of them here. Let's just start from the Ethereum USDT. So I was waiting for the this Ethereum USDT to break out of this consolidation right here. Then it did. It really went up to this selling zone, this supply zone, and that is where it finally pulled back, and now it is falling. It's trying to fall down to the, I don't know where it might go. We can use a Fibonacci from the low to the high right here, and we can see the TP. This price now can potentially reach this level 2220 right here. So the strategy here did work, but it didn't hit it did hit the TP. The TP can be calculated by using this method. Okay, you measure the height of this consolidation area, and then you project it to where it broke the consolidation right there, right? So you can see it broke the consolidation right here, and you project it upward or the downward to wherever the price broke the this zone. So this is the TP1, take profit one. It was hit, and if you want the other portion of your trade to run, you can let it run, but I recommend that you leave only 30% of your trade to run. Okay, because as you can see here, the market just melted back to your stop loss. So we put our stop loss down here. If you are following me, you would already know that our stop loss will be here, right here, inside this consolidation. So if that stop loss is smashed, sorry, what did I do? If that stop loss is smashed, this means that the market is now changing gears. Okay, the market could potentially change gears and fall to the downside. So this is the Ethereum situation. In the Litecoin versus USDT, we also had a nice profit, but as you can see, it is a 2-hour time frame, so yeah, there is a lot of pips. It is not a 15 minutes, not 5 minutes, it is not a 1 minute chart. This is 2 hour, which means this big candle represents a huge pip. Okay, this is huge. As you can see, it is 167. If you project it to all the way down, it is around 290, almost 300 points. So it is huge. It is a lot of pips. So finally I was waiting for the breakout, and it finally did break, and that first breakout was attempted right there. So you could have entered there, there is no problem, and your stop loss will be here. Your stop loss will be here because this candle filled the wick. This candle's wick, okay. These two candles, both of these filled the wick of this candle, okay. If you know, wicks and gaps and imbalances like this one, if they are filled, then the candle that filled that imbalance, that wick or that void will be regarded as a swing low or a swing high, okay. It will be regarded as a swing low or swing high, and that swing low or swing high will be used as a stop loss placement and or a take profit, okay. It can be used as a take profit point, or it can be used as a stop loss to place stop losses. So that's why we put our stop loss down here, okay, and we enter it by when the market breaks this line. This line was a triangular, it was a bearish. Here it was a bearish pennant. It was a bearish pennant, but when you look all the way from down here to up here, it's still bullish. We are still bullish, so we'll be expecting some bullish breakouts here, and it did break out to the upside, and we could have been in profit until here. Then I always recommend my viewers to minimize their profits, okay. I want you to minimize your profit. If you had entered your trade with one lot, when you are in profit, you should decrease it. You should get out of the trade. You should get the most amount of lot out of the trade, and let the other small portion run. Okay, let the other small portion run, because that small portion will not hurt your balance, but it might help you increase your earnings. Yeah, it might help you make more money if you let it run, okay. But if it changes direction and hits your stop loss, it doesn't matter, because you have already taken your lion's share, the big portion out of the market, so you are already in profit, so you don't need to worry about anything. Okay, it's just another example that I was planning to enter a trade right here, but it didn't happen. So when I woke up today at the morning, I saw that the price just broke this one and found a support down here. So yeah, it happens. The other one is BNB USDT. As you can see, BNB USDT, it was a little bit wide, as you can see it. I connected both of these wicks, and both three of these wicks, two of them, and the third one was formed recently, 2 hours earlier. It was formed 4 hours before now, and as you can see, we have found we got a break to the downside. So which means we are expecting the market to break down, okay. Sorry for the outside noise, it's on my end, so I apologize. If the market ends up um, coming down here, I will be entering a sell position on BNB USDT, okay. I will be entering a sell, I will be selling it. So as you can see, this is some kind of bullish pennant, but I don't think this bullish pennant will be pierced or broken to the upside. So this is how you use this trend line breakout methods, okay, to enter a trade and and get out of the trade. Okay, this is the simplest technique that you will ever get. It is very simple. It's very simple. Just like here, you wait for a breakout, you connect the three of them, 1 2 3, and on the lower end where 1 2 3 touches, finally it broke to the upside, so you enter. Your target will be this high, and when you put it down here, it will be around here. Then you will get out of most of your trade. You will take most of the trade out of the trade right here. Okay, right here, and let the others run. Let the other portion 30%, or if you entered one lot, you would let the 0.3 lots to run, and you'd take 0.7 lots out of the trade, because the price will not just move in straight lines. It will come down. Believe me, it will come down, and potentially it will take you out of the trade. So it is better to get out of the trade when you are in profit. Okay, so we will put an alarm right here, down here. If you are using trading view, you can use this feature. You can put an alarm by clicking here the plus button right here, and adjust where you want this alarm to be placed. Okay, I'll put it here because I want the price to come down, and when it starts to pierce this one, I will be entering a trade. If it doesn't pierce, or if it doesn't melt down, then there is no trade. I do not even care. So I'll be waiting for the other ones. So this is the case in binary USDT. Let us see Doge. So Doge did the same thing. As you can see, I was waiting for a breakout, and the breakout happened right there. One, 2, 3, 4, 5 breakouts here. So you had 5 opportunities to enter a buy position. You had 5 opportunities to enter a buy position, and your stop loss would be down here, not down there. Okay, what is the difference? The difference is that this candle filled this weakest, this candle's weak. This red candle filled this candle's weak, right? So that will be used as a swing low or a stop loss area. Okay, you can put your stop loss down here. It is most of the time the market cannot touch this thing unless it reaches the upper goal and comes down. Okay, so after that, then the market found a support right there after piercing this one, and then found a support, and again started to push up, right? So your TP would be what? Your TP would be, you measure from this up to this down. This is what you measure, and put it where the price broke the market, right? So that is where it broke it, and that's where you put your TP, right? So your TP is exactly right here. As you can see, isn't this beautiful? You can't get any more simpler than this. Okay, this is perfect. There is no Fibonacci, there is no anything else, there is no nothing. You have to measure. There is no supply and demand zone, there is nothing here. All we are doing is identifying consolidation areas and participate in the distribution in the distribution phase. There is nothing we can do more than this. Okay, that is what we are trying to do. This is a decent amount of money you would get if you had entered this rally. This is 128 points. That is huge. As I told you, this is a 2-hour time frame. If you come down to, let us say, 5-minute time frame, it is a huge it went huge uh, movement to the upside. Okay, bullish movement. It was a huge bullish movement. Where is it? Oh, it is down here. Yeah, yes. As you can see, this is a 5-minute time frame. As you can see it. So the price broke this one and found a support right here. It always does this. It will always does this. There will be a support, and that should be where you enter. You can enter when it starts to break, but there will be a lot of fake outs, so you have to be careful. I'll show you tricks counteract these fake outs, because they will expose you to a lot of losses. Okay, so this is a 5-minute time frame, and as you can see, it nailed it with this wick. This wick was responsible for that TP to be hit. If you had placed your take profit right at 0.9434, you would be out of the trade, because in profit. And it is great. It feels great, believe me. When you are in profit, when you see those blue numbers, you would be laughing. You would be laughing. It feels amazing. Okay, so when in trading, your strategy should be simpler. It should be very simple and easy to understand, easy to apply. No complicated thing, no complicated measuring, and no nothing. Just find your consolidation zones and determine your TP. That's it. That is all you have to do. That is it. And this was another great trade that you could have capitalized on, right? So in here there is no consolidation, so we will be leaving this thing. Okay, we will leave this thing, do its thing. So there is no consolidation, so there is no trade. Let us see the other ones that I have placed. This was really beautiful. This was amazing. This was really amazing. This Solana USDT was great. As you can see, there was two touches, 1 and 2. We have two touches on the lower end too, and finally the market broke. Okay, it it will not get any simpler than this. It will not. Believe me, it will not. Let us just measure the TP from up here to down here. That is a TP. The TP will be placed up there. Okay, so you would get out here normally. Normally you would be out of the trade right there. But if you had remembered that, you would take more than half of 70% of your trade out of the trade. You will get 70% of the trade out of the trade, and you would have already been in profit, and your money will be safe, right? It is not online, it is not on air, and you let the other 30% to run. So if you had done that, that 30% would have doubled, tripled, or quadrupled that 30% amount. Okay, that 30% would double and triple, because that 30% didn't start from here, it started down here, right? So there is a huge profit from where you entered to where your TP is, and again to where the price will finally retrace. Okay, so you would let the other 30% run, and the other 30% should be out of the trade after it hits TP2 or TP3. Okay, do not wait for TP4. How do you define that? How do you determine where TP1, TP2, and TP3? So all you have to do is find a swing low in the swing guy. In this case, the swing low is found here. This is a swing low, this is a swing guy. Before the market launched up, before the market launched up. The price, what did it do? The price pulled back. Okay, that's, you will find this phenomena everywhere. It is everywhere, in crypto, in futures, in commodities, in forex. It is everywhere. In binary, it is everywhere. Because this is how the market moves. It is simply how the market moves. There is nothing more. So there will be a pullback, and that pullback is they are coming back one more time to find lower prices. They are accumulating a lot of buy positions when the market descends by this big candle. Okay, the sharks or the banks and the hedge funds are accumulating huge amounts of buy positions.